I think in some quarters, people are questioning whether the market in general is too bullish on the recovery story, given that I think most of the forecasts for global GDP growth this year ranges from 4.5% to 6.5%. And for the US and China, numbers are averaging between 6.5% to about 8.5% and even 9%. But we do think that the recovery is likely to be strong because this recession, or last year's recession, is not the same as the previous recessions. The previous recessions, particularly the one in 08-09, is largely because of debt. So when you have very high debt levels and households are struck and they can't spend, it takes time for them to actually deleverage, build up the balance sheets before they can actually spend. But in this recession itself, we've seen households actually building up on the precautionary levels of savings. And it's because governments are telling them, look, you can't go out, you can't go shopping, you can't go out to eat, you have to do everything at home. And as a result, the households have actually pulled back their spending and the savings have actually increased. So whenever the governments actually let off again and the lockdowns actually end, the spending to be unleashed is likely to be quite ferocious. And therefore, we're actually quite positive that the recovery should kick in by the second half of this year when the vaccination levels have actually picked up a lot more.
So all that stimulus that you talk about, Kelvin, will be reflationary to some extent. What does that mean for the Fed and the fiscal policies and the monetary policy?
Well, even with the kind of stimulus that we've had last year and this year, your core PCE numbers are still pretty miserable. They're at about 1.6 to 1.5%. The Fed's target is 2%, but with the change in the policy last year, they're looking at the average inflation target rate of basically about 2.5% in our view. So we will need inflation to pick up to 2.5% before the Federal Reserve actually starts to think about increasing rates or neutralizing the balance sheet. But in any case, we do think that with the recovery coming in quite strong this year, that people should perhaps see the Federal Reserve start to actually think about tapering the balance sheet by the end of this year and perhaps ending the tapering by the end of next year.
Okay, and where does that leave the rotation trade, broadening out this rally, seeing more depth in it, with banks particularly picking up some of the slack?
Yeah, we do think that there's room for the rotation to value to go, and largely because of the blue sweep that we had in the last week or so. That means that the fiscal stimulus that the US government can actually unleash will be far higher than what was originally envisaged. But of course, we got to be a bit more careful here because despite the fact that Vice President Harris has the tiebreaker vote, you still need the Democrats to win over some of the moderates and some of the Republicans in the House to actually be able to actually unleash some of the fiscal stimulus that's likely to actually come through. But in the event that it comes through, we do expect this rally in the value stocks to actually continue for quite some time.